Bueno, aquí en el Foro Económico Mundial, en Davos, en Suiza, estamos con Simone Smiles. Él pues es uno de los directores importantes de UBS. Vamos a conversar con él sobre estrategias de inversión y sobre la situación económica mundial en este momento. Simon, how are you?
Very well, thank you. Thank you for having me.
Thanks for being with us. First, as a strategist for investments, how do you see the world economy? I mean, everyone is saying here in Davos that this is a very complex situation.
Well, the world's always a very complex situation. I mean, it's quite amazing. If you look back to 2016, the start of 2016, there were concerns over the US presidential election, there were concerns over a UK referendum, there were concerns over other issues in Europe, for example, Italy. In fact, to many people's minds, the worst possible outcomes happen in each of those cases, thrown as well one of the worst years ever for January and February for equity markets and risk assets around China concerns, etc. And yet we got through all of these issues, and last year ended up being a pretty good year for risk assets. Right. US equities up 10%, emerging market equities up almost the same, high yield credit up, oil up, etc.
How come equities could be higher if that scenario actually became true?
Well, it's pretty amazing. I think one of the simple answers, though, is time and time again, politics doesn't matter. What dominates the news headlines typically doesn't actually matter as much for financial markets. You look at the events last year, it took 3 days, arguably, for the market to digest the Brexit outcome. It was 3 hours to digest Trump, it was 3 minutes to digest the Italian referendum. The market instead, after it gets through the initial headlines, financial markets tend instead to focus on fundamentals, economic fundamentals and earnings fundamentals.
And when you see all these aspects, do you think we need to focus on specific assets to actually see what's going to happen in the future?
Well, yes and no. I think if the recent past, and in fact the not so recent past, continues, the political events dominate headlines, but it's the earnings fundamentals, it's the economic fundamentals that matter. It's then the earnings and economic fundamentals we should be looking at. And if you look today, you've got every major developed economy in the world with forward-looking business sentiment suggesting accelerating growth. You've got the same across every major economy, including China. Many of these measures are at multi-quarter highs. You've got retail sales growing robustly in China. You've got positive economic news out of the United States. So the economic fundamentals are actually set up for most risk assets to do reasonably well. If you look at the earnings fundamentals, Bank of America Merrill Lynch put out a net earnings revision ratio. That's gone up 6 of the last 7 months in terms of global equity earnings, and in fact is currently at a 6-year high. So the earnings outlook, it seems to be improving, the economy seems to be improving, and despite all the politics, it's why we're moderately risk on for clients.
But wasn't this the result of monetary policies around the world?
Well, monetary policy remains incredibly loose, as we know, but that's been a feature of the last year, 2 years, 3 years, 4 years, 5 years. It definitely plays a role. However, corporate fundamentals continue to be robust. It's no longer just the central banks pushing down rates and forcing people up the risk curve. The earnings and economic outlook actually does seem to be improving, finally.
Yeah. How do you see, or how do you recommend your clients to have certain specific investment strategies for this year? I mean, taking into account what you've just said.
Yeah, I mean, I think, unfortunately, the best answer to your question is actually perhaps the most boring one. Last year was a perfect example that the best piece of advice we can give our clients actually is to have a globally diversified portfolio. It was a great year, as it turned out, for exactly that strategy. However, around that, we do obviously have tactical asset allocation views. We think US equities will do reasonably well this year, and we have a modest overweight. We're expecting 11% earnings growth, in part driven by a removal of the headwinds faced by, from the earnings construct by the stronger dollar and also weakness in oil, but also linked to that a quadrupling of the energy sector's earnings from very depressed levels. We like European high yield, we like senior loans in the United States, and we have a potentially anti-essential call on the euro. We think the euro is going to actually appreciate against the dollar, and we're targeting 115 in 6 months' time.
Now, what do you think about emerging markets?
We have a modest overweight in emerging markets relative to Swiss equities in particular. We're taking a broad brush view there. We actually have a reasonably constructive view on the outlook for Chinese risk assets as well, particularly consumer and consumer-related stocks, and that obviously in part drives that relatively favourable view on emerging markets. But I guess that's our tactical asset allocation views. The other two things that have been quite noticeable in terms of a shift in sentiment, I think among the clients I'm talking to, which tend to be our largest clients. One has been an increasing willingness to pass over tactical trading, given how difficult it's been, to experts, and we've got a range of examples there. The other is an increasing prevalence of impact and sustainable investing, really, really noticeable, and perhaps against a backdrop of the populism that is being discussed here at the World Economic Forum, unsurprising.
Talk to me about these tactical traders. How is that operating currently?
Yeah, one example, we hired a team from Brevin Howard at the start of last year, Vinay Panda, and a very experienced team, and they're focused on very short-term relative value trades, trying to exploit the volatility we've seen in markets. We've seen a huge pickup from our clients, very much fitting this meme of have your core portfolio globally diversified, and then if you're going to try and trade events, given how difficult it's proved, delegate that to true experts in the space. So I guess, yeah, as a key example.
Yeah, and finally, you were just talking to me about, before we began this interview, about this announcement that you had on DBS. You are raising capital for, is it development or what is it?
Yeah, so the Sustainable Development Goals, ambitious goals across 17 different areas to try and advance development, to try and bring, alleviate poverty, to deal with healthcare, education, etc. They were announced by the United Nations, and they're meant to set out the roadmap through to 2030 for the world. Unfortunately, there's a huge funding gap, depending on estimates between $1.5 and $2.5 trillion a year to achieve those. And there are many initiatives globally which are focused on trying to deploy capital. Almost all of those initiatives are focused on institutional capital, and yet we've got huge pools of private wealth, which we know is the largest wealth manager on earth, that are potentially, with some roadblocks removed, very able to help fund a number of these goals. The goals which can be solved or contributed to by investment capital that can be priced are well placed for our kind of clients who can think longer term strategically, deal with their liquidity to fund. So we announced a range of initiatives today. UBS committed, Sergio Motti, our CEO, that at least $5 billion of client assets will be deployed into new impact investments linked to the SDGs over the next 5 years, a huge sum. And aligned with that, we announced a range of different partnerships, because we obviously can't do this alone. So we're going to partner with the RISE Fund, TPG Growth's impact fund, to bring that to our clients, targeting market returns and high impact. We continue to try and use our network of clients to connect them with very impactful projects through our Global Visionaries program, and we had David Hertz, Gastronomica, as founder at the event with us. And we announced a call for partners to join us in launching an SDG-focused investment and philanthropy platform called Align 17. UBS committed to support the philanthropy and also the investment side. We're calling on other partners to join us, and PwC, the Gates Foundation, Rockefeller and TPG have all expressed interest in doing so.
Regarding the investment, isn't that very risky for your clients?
It depends how you're investing. I mean, there are many great investments which also have very high impact. So targeting market returns in an impact investing structure can be incredibly rewarding. Not only do you make attractive returns, but there's also that double bottom line. There's the doing good. And as I mentioned, for our clients, they can deal with their liquidity, they can deal with going off benchmark, they think longer term because they've typically built their wealth through businesses. It perfectly fits trying to play these longer term trends.
Okay, finally, Simon, I would like to ask you, you might not be an expert on Mexico, but what do you think about our country? What do you think about Latin America? What do you think are the takes for a country like Mexico trying to be a developed one, but still struggling with our own structural problems?
Yeah, and obviously the uncertainty over the political situation in the United States. I mean, our view with respect to the most likely path in the United States is not that some of the more hyperbolic rhetoric will be initially focused on, and instead it will be one of focusing on fiscal stimulus, potentially infrastructure spend, and potentially corporate taxation reductions. That kind of dynamic should actually be supportive, obviously given the trading relationships with Mexico, rather than some of them, more left tail potential scenarios. So, except that it's a challenging environment, we don't have overweight positions in Mexico, I've got to say, for now. But again, probably the worst scenarios which are being priced in, don't fit our base case.
What do you expect to take away from Davos personally?
This is my first time here. I mean, it's an incredible event. I know you've been here 10 years in a row, so I'm speaking to the converted. Look, it's an amazing collection of people from all walks of life, and there seems to be a real purpose against this growing trend of populism to try and sort of way to partner to do good. So in terms of what we're trying to do at UBS, the partners that we already have up here, my aim is over this week to find more partners in that journey.
Very good. Simon, thank you so much.
Thank you very much.